Hello students, in our previous lecture we are start a new content in unit number 4, that is income from salary. In our earlier lecture we are studied a meaning, definition, then exemption or various exemption from salary. Then we studied a taxable allowances, fully exempted allowances, partially taxable, partially exempted allowances, deduction under section 16 from gross salary, then perquisites, okay, meaning of perquisites, taxable perquisites, exempted perquisites, and in our last lecture we are studied a valuation of perquisites, that is valuation of rent free accommodation, unfurnished and furnished, and motor car facility. Okay, in our today's lecture we are going to solve a practical problem on computation of income from salary. So here problem number first is Mr. Rajesh, an employee of a sole proprietor Satara, has given the following information for the previous year 2019-20. So here Mr. Rajesh is an employee of sole proprietor Satara, has given below the following information or has furnished the following information of previous year 2019-20. Okay, so here a salary rupees 1,10,000, bonus rupees 25,000, commission rupees 20,000, then contribution to recognized provident fund made by both employer and him rupees 12,000, then interest credited to unrecognized provident fund at 12% per annum rupees 11,000, vehicle allowance spent for office purpose rupees 5,000, rent free furnished accommodation for which employer pays rent of rupees 2,000 per month. Okay, 2,000 per month. So here rent free furnished accommodation is provided to the Rajesh. Then furniture costing rupees 30,000 is provided in accommodation. So here cost of furniture in accommodation is rupees 30,000. Okay, so here perquisite is given, that is rent free furnished accommodation. Then watchman's salary paid by employer rupees 3,000. So here employer paid salary to watchman of his employee amounted to rupees 3,000. So this is taxable. Hospital bill paid by employer rupees 18,000. Okay, so 18,000 is also taxable. Okay, because employer paid, whatever the employer gives to the employee are all taxable. Then he has paid professional tax amounted to rupees 2,500. So professional tax is taken into consideration and deduct from the gross salary. Okay, so professional tax is taken into consideration for deduction of these professional tax from the gross salary, and according to this information we have to compute a income from salary for assessment year 2020-21. So here prepare a solution, that is solution in next line, of computation of income from salary. Okay, then name of SEC. Okay, then name of SEC, that is Mr. Rajesh. Okay, and he worked in Mr. Rajesh worked at Satara. Okay, then assessment year 2020-21, then previous year previous year 2019-20. Okay, then prepare a three column that is particulars, amount in rupees and amount in rupees. Amount in rupees. Here we compute a salary. So here salary is given, that is salary rupees in outer column, amounted rupees 1,10,000, then bonus is also included in the salary. So here bonus is also a part of salary, so bonus is included in the salary. Here a bonus amounted rupees 25,000, then commission. So commission is also included in the salary, amounted rupees 20,000, then contribution to unrecognized provident fund made by both employer and employee, rupees 12,000. So employer and employee both are contributed to the unrecognized fund, amounted rupees 12,000. It means 12,000 contributed by employer and 12,000 contributed by the employee. So here contribution to unrecognized provident fund. So remember the tax treatment for unrecognized provident fund. Okay, so here remember the tax treatment for provident fund. So unrecognized provident fund, or employer contributed to the unrecognized provident fund of employee, so all amounts are exempted under section 10 subsection 11 and 12. Okay, so here employer contribution to URPF means unrecognized provident fund, inner column, amounted rupees 12,000, less exemption under section 10, or whole amount is exempted. So here whole amount is exempted if the employer contributed to unrecognized revenue fund of the employee. So whole amount is exempted. Remember the tax treatment. Okay, so here whole amount is exempted, whole amount of contribution is tax free. So here in outer column amount is nil. Okay, nil of exemption, nil of contribution in URPF, unrecognized provident fund. Unrecognized provident fund, here amount is nil. Then second one is interest credited to unrecognized provident fund, balance at 12% amounted to rupees 11,000. So interest credited to URPF at the rate 12%. Okay, so amounted to rupees in inner column, that is 11,000 interest were credited to the unrecognized provident fund of employee. So here tax treatment for interest credited to URPF. So whole of interest is exempted. Whole amount of interest is exempted. So less whole amount less exemption. So 12% whole percentage of interest is exempted. That is 11,000 is exempted, and outer column is nil. Okay, so here again we get a nil amount of interest on URPF credited to the URPF. Okay, so here nil. Then vehicle allowance. So vehicle allowance is important. Vehicle allowance in inner column, because the vehicle allowance fully used for office purpose. So the expenses or the allowances which is used for office purpose, then all amount of allowances is exempted. Less office or official purpose. Okay, official purpose. So here 5,000. Vehicle tax is fully taxable if the vehicle allowance is used for personal purpose, but here vehicle allowance is used for or given for official purpose, or used for official purpose by the SAC. So here we get a deduction amounted to rupees 5,000. Amounting column nil. Then second one is rent free furnished accommodation. So here uh, the rent free furnished accommodation is a perquisite, so we have to compute a rent free or value of rent free furnished accommodation. So here value of rent free furnished accommodation is calculated by, we studied the calculation of rent free furnished accommodation. So here working note number first, for the purpose of working note number first, that is calculation of value of rented furnished rented furnished accommodation. So for the computation of accommodation, we have to find out the salary. Okay, so salary is equal to, okay, so salary is equal to, first of all, find out the salary for computation of accommodation. So salary is equal to basic salary, salary plus basic salary plus basic salary plus bonus plus all commission plus all taxable allowances. All taxable allowances. Okay, so all allowances. So here we taken into consideration only two allowances. Okay, that is vehicle allowance is exempted, another expenses, sorry, allowances is rupees, that is watchman salary. Okay, so watchman salary paid by the employer, and then medical bill reimbursed by employer. So here salary includes all these. First of all, we write down the all taxable allowances. So here then we compute a accommodation. So only working note number first is given here. Then we write down second point, that is watchman salary. So salary to the watchman paid by employer. So whatever salary to watchman paid by employer. Okay, so salary to watchman paid by employer is a perquisite. Okay, and this perquisite amounted to rupees 3000 is taxable. Okay, then then a hospital bill paid by employer, hospital bill paid by employer. So here hospital bill paid by employer, it is also a perquisite, and perquisite is not taken into consideration while computing the salary. So here allowances or taxable allowances is not given. Okay, taxable allowances is not given. Then here compute a salary for accommodation, we taken into consideration all the things here. Okay, perquisite as well as all taxable allowances. Okay, vehicle allowances. Okay, but here for computation of accommodation we taken into consideration that basic salary plus bonus plus all type of commission plus all taxable allowances. Okay, but perquisite is not taken into consideration. So salary is equal to, so salary is equal to here, so salary is equal to basic pay or basic salary 1,10,000 which is given. Okay, here we taken into consideration 1,10,000 is the salary, 1,10,000 is the salary plus bonus. So amount of bonus is given, that is 25,000. Okay, here bonus 25,000, bonus 25,000 plus commission. So commission is taken into consideration here, that is amounted rupees 20,000. So commission is included in salary for accommodation. Okay, for computation of accommodation we taken into consideration all type of commission, bonus, salary plus all taxable allowances. But here perquisite and contribution to the provident fund is not taken into consideration, remember this thing. Then plus allowances, taxable allowances, taxable allowances. So taxable allowances is nil. Okay, here taxable allowances is not given. Okay, taxable allowances is not given, so the taxable allowance is into bracket nil. Okay, then make the total, and salary is equal to salary is equal to 1,10,000 plus 1,10,000 plus 1,10,000 plus 25,000 plus 20,000, we get 1,55,000 is the salary. Okay, then we compute a rent-free furnished accommodation easily. When we compute a salary for accommodation, then we easily compute a rent-free furnished accommodation. So we already studied the format for computation of accommodation, okay, in our last lecture. So here calculation of taxable value of furnished accommodation. Okay, so prepare a two column, that is particulars rupees. Okay, particulars rupees. Easy way to find out a perquisite of rent free furnished accommodation taxable, very easy way. Just remember the valuation of perquisite. So here particulars, then rupees, here value of rent free unfurnished. First of all we find out a unfurnished value of rent free accommodation, then we add a 10% cost of furniture, we get a value of or taxable value of rent free furnished accommodation. So first of all find out the value of rent free unfurnished accommodation. Okay, so unfurnished accommodation is calculated list of the following. Okay, list of the following or minimum of the following. So here minimum of the following, that is 15% of salary. So 15% of salary, so salary we compute, so 15 divided by 100 multiplied by 1,55,000, got it? So we get a 15% of salary amounted to rupees 15 divided by 100 on 1,55,000. So 1,55,000 into 15 divided by 100, we get a 23,250. We get a 23,250. Okay, then we taken into consideration that the rent paid by employer, because the accommodation is not owned by the employer, accommodation is not owned by employer. So the employer is paid a rent of this accommodation amounted to rupees 2,000. Okay, So 2000 rent paid by, second one rent paid by, first one is, remember the accommodation. Okay, remember the accommodation, remember the accommodations working note. Then second one is actual rent paid by employer. Okay, so rent paid by employer is per month rupees 2000 per month. 2000 into 12 we get 24,000. 24,000. Okay, we get a 24,000. Now we taken into consideration the list value for rent free unfurnished accommodation. So list of these two is 23,250 list value. Okay, so list value is 23,250, and that 23,250 is the value of rent free unfurnished accommodation. Here 23,250. Okay, 23,250 is the value of rent free unfurnished accommodation. Here we get a rent free unfurnished accommodation. Okay, rent free unfurnished accommodation 23,000. Then we add a value of furniture. So value of furniture 10% cost, 10% value, here into bracket 10% value of furniture, value of furniture, that is 10%, 10 divided by 100 multiplied by the value of furniture is given in the problem. Okay, so here the value of furniture is given, that is cost of furniture 30,000. On 30,000 we compute a 3,000, then add this 3,000 in value of unfurnished accommodation, so here 30,000. Okay, on 30,000 we get here, that is 3,000. Okay, 10% on 30,000, that is 3,000. We get a value of, or taxable value of, here we get a taxable value, that is 23,250 plus 3,000, we get 26,250. Okay, is the taxable or value of furnished accommodation. So taxable value of furnished accommodation, taxable accommodation amounted to rupees 26,000. Okay, value of furnished accommodation taxable. Okay, how to compute? So again we revise the valuation of accommodation. Okay, so here The second rule is applied to the valuation of accommodation because the accommodation is not owned by employer. Okay, accommodation is not owned by employer, so we compute as per the accommodation or as per this rule. Okay, so here B part, that is other employees. So here Rajesh is not a government employee because he is worked in sole traders or sole proprietors. Okay, so other employees, private sector employees, computation of accommodation. Here chart is in front of you, that is population when or where accommodation owned by employer, but in our first problem the accommodation is not owned by employer. Read the accommodation here. The accommodation, okay, so here rent free furnished accommodation for which employer pays a rent. Employer pays a rent means the accommodation is not owned by employer. The employer has take the bungalow on rent and paid a rent on behalf of the employee. Okay, amounted to rupees 2000. So here accommodation is not owned by employer, so we compute as per the rule given here, that is not owned by, the accommodation is not owned by employer, taken on rent basis. So here we consider the list of the following. List of the following is rent paid by employer less 15% of salary. So here we taken into consideration the 15% and rent paid whichever is lower. Okay, not less. Here 15% or rent paid whichever is lower is considered for the valuation or taxable value of accommodation, but this taxable value of accommodation is unfurnished. Okay, uh, we want to compute a furnished accommodation. So first of all compute unfurnished accommodation. So here rent paid or 15% of salary whichever is lower is a unfurnished or taxable unfurnished accommodation. Add 10% cost of furniture in unfurnished accommodation, we get a taxable value of rent free furnished accommodation, that is 26,250 is the taxable value of furnished accommodation. Got it? So here we apply this rule. Okay, so remember the rule. Okay, how to compute or how to value the tax on perquisite or accommodation. So here the value or taxable value is rupees, taxable value is rupees 26,250. So here value of rent free, value of rent free furnished accommodation amounted to rupees 26,000, 26,250. Then here we taken into consideration all the things, only professional tax is not taken into consideration, but professional tax is taken into consideration after gross salary. Okay, so first of all find out a gross salary. So we taken into consideration salary, bonus, commission, then contribution, interest, then vehicle allowance, then rent free, then cost is also included in the rent free furnished accommodation. Watchman salary paid amounted to rupees, watchman salary paid amounted to rupees 3000. So it is a perquisite and it is taxable. Hospital bill paid, it is a perquisite, it is taxable. Okay, then professional tax. So professional tax is deducted from gross salary. So first of all come make a total of outer column. Okay, and that total is called a gross salary. Here we get a gross salary, so make the total, and total is equal to 1,10,000 plus 25,000 plus 20,000 plus 3,000 plus 18,000 plus 26,250. Okay, so here we get a gross total income from salary, gross income from salary. Okay, so gross salary is equal to 1,10,000 plus 25,000 plus 3,000 plus 20,000 plus 18,000 plus 26,250. We get a 2,02,250. 2,02,250 is the gross salary. Is the gross salary. Is the gross salary. Okay, it's called a gross salary. Okay, so gross salary is rupees 2,02,250 gross salary. Then we deduct a deduction under section less deductions under section 16. Okay, under section 16. So here a standard deduction, first point, that is standard deduction under section 16 IA or first A, section first A. Okay, that is fixed deduction amounted to rupees 50,000 with effect from 1st April or with effect from the assessment year 2020-21 amounted to rupees 50,000. Okay, so here fixed deduction amounted to rupees 50,000. Okay, then entertainment allowance. So entertainment allowance is not allowable for deduction under 16 in for the private sector employees. So here only professional tax, and professional tax is given, that is amounted to rupees 2,500. Okay, 2,500 professional tax amounted to rupees 2,500. Okay, make the total, that is 52,000 professional tax 52,000 plus 50,000, that is 52,000 standard deduction, and professional tax under section 16 subsection 3rd, under section 16 subsection 3rd. Okay, so here total deduction is 52,500. so deduct this 52,500 from the gross salary. So here 52,500 we get 1,49,750. 1,49,750 is the income from salary or taxable income from salary. We get a income from salary amounted to rupees 1,49,750. Okay, got it? How to remember, how to compute a income from salary? So whatever the employer gives to the employee, all are taxable. Remember the partly taxable allowances and fully taxable allowances, as well as perquisites, taxable perquisites and exempted perquisite, as well as valuation of perquisites. Okay, so here first of all we take a example on valuation of perquisites, and the house is or the accommodation is not owned by employer, it is very easy to compute a accommodation. In our next lecture we are compute a another problem on computation of income from salary. Okay, thank you very much.